This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices settled higher on Friday, reversing earlier losses as traders worried that this week's talks between the U.S. and Iran had failed to reduce the risk of a military conflict between the two countries. Brent crude futures settled at $68.05 a barrel, up 50 cents, or 0.74%. U.S. West Texas Intermediate, WTI, crude finished up 26 cents, or 0.41%, at $63.55 a barrel. In overnight trading, both benchmarks fell, but during the U.S. session both Brent and WTI rose more than $1 a barrel before moderating gains toward settlement.
The European Commission on Friday proposed a sweeping ban on any services that support Russia's seaborne crude oil exports, going far beyond previous piecemeal EU sanctions in its effort to stunt Moscow's key source of income for its war on Ukraine. Russia exports over a third of its oil in Western tankers, mostly from Greece, Cyprus and Malta, with the help of Western shipping services. The ban would end that practice, which mostly supplies India and China, and render obsolete a price cap on purchases of Russian crude oil that the group of 7 Western powers have tried to enforce with mixed success.
Moving on to the top news in the energy sector.
Indian refiners are avoiding Russian oil purchases for delivery in April and are expected to stay away from such trades for longer, refining and trade sources said, a move that could help New Delhi seal a trade pact with Washington. The US and India moved closer to a trade pact on Friday, announcing a framework for a deal they hope to conclude by March that would lower tariffs and deepen economic cooperation. Indian Oil, Bharat Petroleum and Reliance Industries are not accepting offers from traders for Russian oil loading in March and April, said a trader who approached the refiners.
U.S. oil production fell in November to the lowest since July, while oil demand fell to the lowest since April, data from the Energy Information Administration showed on Friday. Crude oil output fell to 13.78 million barrels of oil per day in November, down about 82,000 from October's record high 13.86 million barrels of oil per day, the EIA data showed. That is the first month-over-month decline in U.S. oil output since May 2025, and the biggest fall since adverse weather-related outages caused a slump in January 2025. The U.S. is the world's top producing nation as well as the globe's top consumer. Gains in U.S. output, powered by more efficient drilling techniques, had contributed to forecasts of a glut in oil markets this year, so November's decline could lead analysts to reassess expectations of oversupply. Next, we have the top news in metal markets. Copper shrugged off an early dip to move back above $13,000 per metric ton on Friday, snapping 2 straight days of declines as more affordable price levels sparked some buying interest and investor sentiment improved. Benchmark 3-month copper on the London Metal Exchange was trading up 0.8% at $13,001 per ton as of 1700 GMT, having earlier slumped as much as 2.9% to $12,528. The red metal hit a session high of $13,037.50 and was on course to end the week down 1.2%. Having fallen 10.5% from a record high of $14,527.50 on January 29.
Gold prices gained on Friday, rebounding from a sharp sell-off in the previous session, as global equities fell and US-Iran tensions lingered, while the CME Group raised margins on precious metals to counter risk. Spot gold rose 1.9% to $4,859.43 per ounce by 0923 GMT, while U.S. gold futures for April delivery fell 0.1% to $4,883.10 per ounce. I do see a bit of a safe haven investment coming in, but bear in mind that there is still some caution after last Friday's sell-off. We still have this fear about Iran-US tension that is still intact, said Kelvin Wong, a senior market analyst at Oanda.
We will now look at the top news in the agricultural sector.
U.S. President Donald Trump on Friday signed a proclamation to hike the country's low-tariff imports of Argentine beef, though economists have said the attempt to lower costs for American consumers will likely have little impact on prices. A White House official said in October that Trump would make such a move, evoking fury from the nation's cattle ranchers. U.S. beef prices set record highs last year, benefiting ranchers who largely supported Trump, due to strong consumer demand and declining cattle supplies.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.